Boom. All right, ladies and gentlemen, we got another one here for you. We're going to explore the future of hedge funds, the impact of modern technology, and the role that Repool is doing in shaping the financial industry. So let's get this one started. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life: prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone, because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros. All right, ladies and gentlemen, today we got a fascinating guest with us. He's the leader in the world of hedge funds and the founder of Repool. He's on a mission to revolutionize hedge fund infrastructure, making fund managers' lives easier and enhancing transparency for investors. So in this episode, we're going to dive into the world of modern hedge fund solutions. He's going to share his insights on how Repool is streamlining fund management, empowering investors, and driving innovation in an industry that's ripe for change. So let's welcome to the show, Mr. Kevin Boo. All right, Kevin, the party has begun, man. Welcome to the show.
Thank you. That is quite an intro sequence.
It's all about having fun, man. Besides, we're going to be talking about money, and I think money's kind of one of those exciting topics. So let's jump into this, dude. Very first question I always ask is the plug question. What is it that you do for a living? What are you here to promote, my friend?
Yeah, absolutely. So as you said in the intro, I'm the founder of Repool, and we're a hedge fund infrastructure startup. So we provide modern fund solutions to help fund managers launch and operate their funds more easily. So from the audience perspective, I suspect it's not super common, but for folks who have ever contemplated creating a pooled capital vehicle and pulling a couple $1 million plus from investors, Repool really makes that process a lot more streamlined and easy.
Yeah, it's not something that every investor kind of works their way up to, but I feel with like the emergence, not emergence, 14 seasons in of shows like Shark Tank or The Profit, you start to learn a little thing or two, and you have more and more people kind of delving into syndications and putting together projects like that. And a lot of people don't know even where to begin or when they're ready to move on to a project like that. So who is a target audience for somebody like Repool? What is a person who comes to you? What's some of their demographics? What do they look like? What are they thinking? What position are they in where they're ready to move on to that next phase?
Yeah, so for the most part, our client base are actual former institutional finance folks, although we do have some, let's say, like non-traditional pure retail investors who are obviously very talented, serious long-term investors that have significant interest from high net worth friends and family. For the most part, though, I would say that it's people who have been on a trading desk, been at some of these classic Wall Street firms, typically people with at least five, if not more, years of experience in the career, usually 30s plus, that, essentially have the credentials and the talent to successfully manage and be able to fundraise multiple millions of dollars, which is, of course, no easy feat to do.
Yeah, and correct me if I'm wrong, but you're not really raising the capital. You're giving them the tools necessary so that they can go out and raise capital on their own in a more organized, strategic way. Am I correct?
Yeah, that's right. So, launching a hedge fund is kind of like launching any business where there are a ton of things you need to do that are not actually executing on whatever it is you're trying to bring to life, right? So, for you, as an example, as a podcast host, you have a bunch of stuff you do that is completely unrelated to being a good podcast host. And hedge funds are similar, right? It's just a business, but it has a lot of complexity. In fact, arguably some of the highest complexity in terms of what you need to do to go from 0 to 1. And there's obviously a large regulatory and compliance component, unlike a regular business where I think it'd be very hard for the median business or podcast or startup to get in trouble for doing something quote unquote wrong with how they start their company. But in hedge fund land, I mean, out of the gate, you're under the watchful eye of the SEC. And so you can actually screw things up immediately. So as a result, I think it is a relatively intimidating journey to go from 0 to 1, especially given that even if you have a institutional background or not, you tend to know very little about the quote unquote back office structuring of a hedge fund.
You got that young gene going for you. You're gonna look forever young, which is an awesome thing, but not always when it comes to business and investment financing. Sometimes that kind of can hinder you a little bit. Tell me a little bit about your background. And how did you get to starting Repool?
Yeah, so I have about 10 years of experience in startups, but you are right that, or if this is what you're alluding to, rather, I don't actually come from finance myself. So we are kind of that classic outsiders play. And you're right. I think it is sometimes a bit of an obstacle that we have to overcome because we have to essentially prove our credibility in an industry that is especially credibility and don't rock the boat oriented, right? So a lot of the competitors that we're up against are companies that have been around for decades. I mean, some of these players have been around for, over 100 years, and they've just been long-standing institutional finance players. And as a new player on the street, not just as a company, but also as outsiders from a founding perspective, you do, have certain people who are going to be more concerned with that than not. But look, like any startup, at the end of the day, you generally don't start out the gate fighting, battles for business with the highest end of your market, right? You kind of work your way up from smaller funds or smaller businesses. Within any segment of any business, there are always some segment of customers or clients who are going to be more, open to new technology, new solutions. And then ultimately, when someone gets on the phone, they can make a determination as to whether they find us to be credible or not. So we have been careful to curate a lot of expertise in house and be very considered in how we present ourselves, and being also more careful, I think, than the average startup in terms of not being aggressive where it matters, right? This is not really a space where go fast and break things is going to be a particularly attractive value proposition. And, we both have gone in a little bit more of a careful way, and we do our best to communicate that to clients. And so far, I think for enough people, we get across the finish line. But yeah, from time to time, there are clients who say, hey, I'm just not comfortable with the maturity of the business or your background or the team composition. And I think over time, that will become less and less of an issue as we prove ourselves in the market.
You're literally at a crossroads. You could have taken your technology, you could have taken your skill set, you could have worked with a company and kind of grown, used their credibility, and kind of gone from there. Instead, you chose to kind of go the entrepreneurial route and fund your own business and take on that risk. Why do that? Why go the entrepreneurial route? Why not go into something that's already established and kind of curtail that curve that you're going through?
Yeah, well, I think separate from the business itself, there are certain people who are interested in becoming entrepreneurs, and they're entrepreneurs until that happens. And I would say that myself and my co-founder fell into that bucket. Both of us were longtime operators at various Silicon Valley companies and always thought that we had the right disposition and skill set and talent to, and desire to kind of mold something of our own. So at a high level, I think it was just something that both of us wanted to do. And it was, of course, contingent upon having an idea that we thought we had a very strong thesis for that was also a plausible fit to our backgrounds. And my co-founder is the technical half of the founding team and comes from a fintech engineering background. So obviously that's quite relevant to what we're doing. And we had conviction that we had a novel thesis. And I think this is very much a space where, assuming in the hypothetical that, independent of starting a company, my goal was just to enter the hedge fund or, institutional finance services space. I think a lot of these firms are very old school in the very classic ways that you can imagine, right? They are kind of the anti-startup. They are services businesses. They are not really staffed with personnel or culture that is looking to change or look for innovation. And I think that's been a very successful area for startups to actually meaningfully disrupt and provide value in, over the last decade, even through this kind of downturn for private companies and private markets. There is a lot of modern workflow and genuine leverage and value you can bring with a more modern approach and a little bit of an outsider perspective. And I just don't think you're going to get that when you just go to an existing company. You're not going to be able to impart the change that you want to see onto the world.
For the most part, not much has changed when it comes to money management. I mean, the companies that you might place your money in, the markets, they all tended to be the same. But I feel like in the last decade or so, the way we manage money, the type of money you're even using, what type of currency, and the technologies are drastically changing. Whether you're talking blockchain technologies, whether you're going into different currencies, the types of currencies that are going to be used, where the world is kind of changing, those things are drastically changing. To have a new way of looking at different types of hedge funds and in integrating new technologies, I think it's more of an opening for your type of market today than it's ever has been in the past. Where are you guys as a company today? Where do you see yourself kind of going as things like this continue to change throughout the world?
Yeah, look, I mean, I don't think that we have a particular view on like democratization of assets or such, right? Like, I think there are many companies that are broadening asset access, and that happens implicitly, I think, to a minor degree whenever you lower barriers to entry to a given industry. But our goal is more about modernizing and driving a better experience for an existing ecosystem that I don't think is likely to change, right? I mean, hedge funds and private funds have been around for a really long time, and the behavior in them is and has and will continue to be, I think, structurally quite similar. But that doesn't mean that you have to have all paper tools and juggle a ton of service providers and have to slog through process and administrative work on both sides of the aisle, right? And so that's the problems that we're more interested in solving rather than having a view or trying to kind of change retail access to new financial instruments, which I do think is like an interesting category and generally a directionally good thing. It's just a little bit different than what we're up to. And so yeah, I'll pause there in case that changes the question. Otherwise, I'm happy to
Yeah, I
carry
think it
on.
does. I think this because it's just a different avenue that you guys are working on. Well, let me ask you about your experience. You spent a good decade working in Silicon Valley. You kind of ventured off and doing your own thing. You get to talk to different companies that are looking to kind of grow and expand on ideas. If you were to give advice to young entrepreneurs getting started today, whether they're thinking about sometime putting funds together to venture off, or they're just getting started in business now with the experience that you've had, what advice would you give them?
Yeah, I think it's to just be really intentional and have a thesis on how whatever you're doing today is actually a meaningful stepping stone to what you want to do tomorrow. I think a lot of people kind of stagnate or just sit around in a particular role and they make their money and they have, ambiguous goals of career progression, et cetera, that are easy to kind of distract themselves with. But if you have the goal of becoming an entrepreneur, sometimes it happens fortuitously, but most of the time you need to really work towards it and or put yourself in a position to be lucky. So I would just say, you should think very hard about what skills you're acquiring and why, in what order, and I don't think there's one right way to do it, but if you want to start a startup, you probably should contemplate being at a startup prior to doing so because, that's going to teach you a very relevant skill set, as an example at a generic level. But, I think it's just about knowing what you think you need and where your skills are. And I would also say that I do think that there's no rush, right? I think that there's a lot of glamorization of super young entrepreneurs. And of course, it's very appealing to be some like, young 20s whiz kid. But with the state of technology today, the industry has matured so much. And there are so many smart people with so much experience and significant networks and a lot of just actual understanding of how the world works at a professional level that are out there attacking startups. And that's very different than 10 years ago. So I think on average, and this is supported by data, people that have meaningful operating experience tend to be much more successful entrepreneurs. And I think that at least for me, and self-fulfilling, obviously, and self-justifying, a lot of the things that I think we have done well are directly the result of having been in the specific seat before at other startups and seeing very parallel problems and then taking that mental model and translating it here. And if I didn't have that prior experience and understanding of what good looks like, what bad looks like, what, pattern matches look like, that would be a lot more challenging on what is, going to just be a really challenging journey anyways, no matter how much experience you bring to the table.
I feel every entrepreneur goes through some pivotal moments, some moments, whether it's in their venture or in previous ventures, that kind of catapult them. Maybe it's a hockey stick in their company. All of a sudden, things turn around, they're able to scale, or a big mistake that happens and a major lesson is learned, and that's a pivot point in their company. What are some of those memorable things that you can go back to and say, these are big things that happen in my entrepreneurial career that have shaped the way I do business?
Yeah, I mean, I would point mostly to the things prior to relating to kind of the answer that I just gave. Before I helped start Repool, the last two companies I was at, I was, essentially an extremely early employee. Prior to this, I was the second hire and first business hire at what is now quite a successful venture-backed software startup. And prior to that, I was one of two founding salespeople at another very early stage startup that was transitioning off of their founder-only sales approach, and that was again kind of a SaaS platform that was venture backed. And so I think for me, it's more of the journey of seeing the 0 to 1 and the mistakes that have been made. But I don't know that there's any one pivotal moment. I think that's like very attractive. And some people will point at something, or, it's a very common narrative or storytelling framework like, oh, I had this profound realization or this profound shape. But I think it's just the aggregate of, oh, we made this decision. It played out this way over this time because of this. And, here is the thesis. And then you look back and you go, were those things right or wrong? And I think about that a lot, and it's been influential for decisions around how to hire, who to hire for, in what order, when to do certain things. But yeah, I don't necessarily know that I would point at like one singular moment as transformative. I think my career in its entirety and the sum total of the experiences is what is interesting, not any individual subcomponent.
Where do you see the vision going forward then? Well, I guess my question really is more of like when you started this company, did you have an exit strategy in mind? Did you go in with the intent of, hey, we're going to build this to X amount of clients, we're gonna exit at this point? Or is this more like a, you know what, this is something that I feel that we can do for the long term, this is where I'm going to settle my career on? I'm kind of curious where entrepreneurs begin with what vision they have at the end.
Yeah, I mean, I think this probably varies depending on how you start your business. I think the goals are probably quite different if you are not venture backed. But frankly, I think if you're venture backed, there is really only a limited set of answers that are correct. Like, I think there are actually wrong answers, where I don't think that's the case for non venture backed businesses. Whether you want to be a lifestyle thing or you want to exit at a certain point or grow to a certain size, there is no right answer. But when you're a venture backed company, you have to believe and you have to want and have to be geared towards multi-billion-dollar outcome, or you're playing the wrong game. And I think a lot of people make this mistake where they get mad about, VCs not backing them because they have a $50 million idea or something. But when you partake in the venture ecosystem, you take venture capital, you are literally raising a hand that says, I believe I can turn this into, 100x return for your fund. And so, I guess I would translate that to kind of practical terms in short to say, I believe it can be a really big business. I don't have a time horizon for how long that will take. I don't have a specific threshold. It's really just build the biggest business you can. And, there will be opportunities along the way if you do so where maybe someone will want to acquire you, or maybe you won't be able to maintain your velocity, but you'll have to decide then. I don't actually know that planning for some sort of exit outcome helps a great deal, because most of the time the exit outcome that you get is the result of building a really big business.
That's absolutely true. It's just it's different because you come from something that is venture backed, from something that is definitely a company that you raise funds for. So you're kind of, well, you're essentially, you got bosses, you got investors that are coming in and they're looking for a specific result. So the going into that business model is a little bit different than somebody who starts it for lifestyle. It's just completely different. But I was still definitely curious to find out what that end result was going to be for you guys.
Yeah, I
And
mean, look, I think it is just about, a lot of it is, as an entrepreneur, about, at least for me, seeing what you can do. So there's not like a specific outcome tied. It's kind of almost a test for yourself. Like, can you build an amazing business in the areas you think you can? And obviously, like, I have some vague goal of having an interesting financial outcome, but it's really not specifically tied to some amounts. And the time horizon is really flexible. I think if you start a company, again, that's venture backed, at least you have to have a relatively high amount of risk tolerance, because in contrast to what you see at very large established companies, you're generally sacrificing a lot, right? You're working way harder than you would at any other job for less pay than you would make in any amount of, in any role that you would have with the equivalent amount of experience, because venture backed founders actually don't pay themselves very much. And so I say that to say that, like, I have a long time horizon and I just want to build a really big business. And, the other thing I'd say is it's not delusional, right? Like the second that I lose conviction for a meaningful amount of time that that's possible, then I would, seek to do something else or take some pretty drastic moves on the business. But the last thing I'd make, just harking back to the last answer about like it, venture versus not, it's not just about having bosses. I mean, in some sense, I don't. It's actually about how you structure the business, right? Like you have to grow at a certain rate or you eventually fall off the train. And so what that means is once you get the ball rolling, you're operating like a structurally unsound business in a lot of ways if you can't raise venture capital. So I think a lot of people ask questions like, "Oh, XYZ company raised this much money. How did they fail? How could they burn it all?" Well, you're really trying to grow at a velocity that you don't need to grow at when you're not venture backed. And what that means is if you can't hit those milestones, your company is still burning capital and structured a particular way, and it's hired people who are on the journey with you for a particular type of outcome and particular growth trajectory. So the second you kind of fail to achieve those goals for a meaningful amount of time and you quote unquote fall off the venture train, it's pretty much like a death knell for most companies, right? So yeah, it's not even just like a voluntary I'm doing what the VCs want. I think that's not actually really it at all. It's just when you start the train, you can't get off.
Yeah, you're already bit by the bug, man. You were going in anyways. You just found people that want to go in with you, and are pulling that financial backing to kind of go down the same road with you. There's plenty of different places that people can go to when it comes to structuring their hedge funds. But there's a reason why they come to Repool. There's a reason that you guys stand out above that crowd. What is it that you feel your company does best? That key factor that distinguishes you from your competition?
Yeah, so I think there's two major components. The first is that we do a bunch of things that you would traditionally have to get from different disparate players all in one place, right? So we're kind of more like, I wouldn't say quite all in one, but much closer to all in one than what is otherwise out there. And that's really appealing, right? Because in simple terms, we reduce brain damage and we reduce administrative complexity and we kind of compress the time and cost of launching a fund. And that's appealing to people no matter how sophisticated their background as a trader is. And that's a value proposition that I think has kind of been time tested and proven across a ton of different industries and verticals, completely unrelated to hedge funds, right? The other reason is definitely the technology. This is very much an old school space. I think there are very few spaces in today's world that really are quite an entirely old school in the way they operate. And I think for the most part, that's a pretty fair way to characterize hedge fund services, where the incumbents are largely genuinely non-tech enabled services businesses, often with huge offshore labor forces. And the primary means by which you interact with them is often through email or paper. There is no consumer grade experience. I mean, technology moves so quickly, but as an example, right, like 15 years ago, to open a brokerage account as a trader, as a retail trader, you'd have to be filling out paperwork for days. But a number of tech companies, most prominently Robinhood, kind of changed and implemented technology such that that experience now for anywhere you go, you can do in a couple clicks in a couple of minutes, right? And so that is like a similar type of example to what we are trying to do. And maybe the last way to put it is we help people save time so they can actually focus on what they want to do, right? When you're running a hedge fund, your goal is to trade and raise capital. Everything else is a distraction. And our job is to kind of eliminate those distractions. And I think we do it better than almost anyone else. And so people find it to be very appealing.
Yes, please give me the time to do what I actually wanted to do, not all this extra minutia stuff that I have to do. And yeah, I think that's the key to almost everything, right? You're either making me money, you're saving me time. One of those two things that definitely is going to be a reason for me to want to go in and work with you guys. If people want to reach out, they want to find out more about the platform, they want to find out more about the different opportunities that are there. How can they do that?
Yeah, I mean, you can come to our site at repool.com and we have like a pretty robust intake where we'd understand what your goals are, what type of fund you're trying to structure, a bunch of the parameters, and we can make a pretty detailed assessment without you having to talk to us as to, A, whether it's a good fit, B, if it's not, what would be a better fit, if anything, and then C, generally be helpful and provide recommendations and context based on what you're looking for. So, happy to look at anyone or talk to anyone who has ever considered launching their own fund. Just come to our site and take a look.
Sweet, man. We're scrolling across the bottom, ladies and gentlemen. Repool.com, Repool.com. Make sure you guys check that out. Kevin, before we head out, man, any final thoughts? Anything you want to leave us with?
To be honest, not really. I think we've had an interesting chat and covered a lot of different topics. So I really appreciate you having me on board, and happy holidays to everyone listening.
All right, ladies and gentlemen, Merry Christmas. This is pretty much it until the Christmas day. And then after that, we got a few shows after that in the new year. And then 2024 right around the corner. Kevin, thank you very much for coming on the program today. Ladies and gentlemen, hedge funds, they are definitely something that you want to take a look at when you're ready to scale or move up. And there are different ways to go about doing that. And Repool's literally shaping the way it's done. They want to get it as easy as Robinhood. So if those of you who've ever used Robinhood, a quick couple little buttons you sign up for, that's the way you want to go, quick and easy. That's what Repool's trying to do with the hedge fund industry. It's still complicated. There's a lot of things that you need to take care of, but they're there helping you every step of the way. Slow and steady, successfully and correctly is the way they want to do it. So Kevin, thank you very much for being on the program, ladies and gentlemen. We'll catch you guys on the next one. Peace. And we're out.
It's over. Go home.
Is your business in need of marketing? Try starting a podcast, but not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www.business